This is Don DeBartolo, a senior commodity broker and market strategist with Daniels Trading, a division of StoneX in Chicago. I am also the trader behind the Trade Spotlight Advisory Service. My service is three segments, all under one trade advisory. I use futures, commodity options, and future spreads to trade the commodity markets. This is Beyond the Spotlight, a video that spotlights two or three markets that may become trading opportunities for this week. This week begins on Tuesday, September 7th. Yesterday, the 6th, was Labor Day here in the States. So it's a shortened week, but there are actually plenty of opportunities for this week. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Okay, let's jump right into our first chart here. Like I said, plenty of opportunities for this week. This is November 2021 crude oil. On this chart, I have circled off a potential inverted head and shoulders formation. So you picture someone standing on their head. This is the head of the formation, the recent low that was made on the 23rd of August at 61.50. Here's the left shoulder where the market traded down to 63.96 on the 20th of July, bounced, rallied. Now you can see that I have another ellipse drawn off here with another potential support level around the 64 price level. So similar to this left shoulder. So what I'm looking for is a sell-off in this market down to the 64 price level where it should find support and potentially bounce off of there. So that would be the target for a short entry. Now, there's a couple entry opportunities that we can use. The lower we go, the more conservative the entry. Break of today's high. This is Monday's trading session. I'm sorry, break of today's low is one potential. I'd also like to see a break of this 20-day moving average, which comes in at 67.22. Potential stop losses can go above these two session highs, with the most recent being Friday's session, the third at 70.27. However, that's a lot of risk to take on, so I may look to the options market. I may also look to, jump the gun by purchasing puts or put spreads to get in before the potential breakout. Like I said, you can go the conservative route and maybe take a short entry in a break of this session low. That pivot point low there is from the 1st of September at 66.92. You can see my trend indicator. This is a MACD indicator. It's already starting to turn over to a potential downtrend, and the ready is momentum to the downside. This is my MACD indicator. This 20-day moving average is pointed up, which is acting as support. I'd love to see that hook over to the downside just for an additional confirmation. But I think we can trade this November contract down to the 64 price level as a short-term trade, whether it's futures or puts, and take advantage of that, and then see if that inverted head and shoulder formation takes place. And then if these indicators flip back up, we might be able to trade this right back up to the upside. Let's take a look at the October 2021 lean hogs chart next. And I have a trend line drawn off going back to the lows from August 10th. See, there's a few lows here. Market rallied, pulled back to test that trend line, rallied, pulled back. Now, this is Monday's trading session, we're below this lower trend line. If we close below this lower trend line, I want to take a trade to the downside by selling futures or potentially looking at put options, though we're already in the October contract. I checked the volume versus December, and right now it's still in October. So I want to trade the front month contract where there's the most trading volume. Stop loss on a short entry position could go above this high right there, and that is 91.42.5 on August 30th, or you can see there is a strong resistance level with all these recent highs. In the last three sessions, that highest high was 90.37.5 from September 2nd. So about a point lower than this high, but that can really tighten things up for us for a trade to the downside. The target is about this 81 price level. I like that low back in June 24th, 80.90. So maybe just above there and just above 81. There's also a 200-day moving average at 82.93. So that area in here is a potential downside target. MACD, similar to the crude oil chart, as it's starting to turn over, and there is strong momentum to the downside. It's already past that halfway mark, so something to keep an eye on. Trail of stops aggressively in the hogs, because we know, you can see from some of these bars here, you can get a big bounce in the hogs market. So want to be vigilant with moving stop losses on a futures trade to the downside in this market. And the third chart I want to take a look at, market that doesn't pop up here often, but if we've got a chart that sets up as the formations and the indicators to back it, we'll trade it. So October 2021 milk. Milk has been in a huge decline. We are trading up around 19, going back to just May. And recently, though, we've traded down to 1650. So quite the sell-off. I have this upper trend line drawn off just a couple touches now. I think the market can trade back up to this trend line here, perhaps break through it, or perhaps just find some resistance and pull back. But I like to get long this market with the potential 1, 2, 3 formation in place. So this is a trend reversal formation. The number one point is the 12-month contract low. That was made on August 4th at 1643. Market rallied to create this number 2 point. That was made 1801 on the 16th of August. And then we've had this recent pullback back down near the 1650 level. The low actually here circled off at 1650. What's important is it didn't take out the 12-month contract low. So that keeps the 1, 2, 3 formation in place. Typically, you wait for a break of this number 2 point, but that's not what I'm looking to do here. I'm probably looking to trade this on a break of this pivot point high there, 1708. So a break of roughly about the 17 price level. There's also a 20-day moving average at 1712. You can see my MACD indicator is similar to crude and hogs, but the other direction, starting to turn over to the upside. And we do have some momentum, very little to the upside here. I wouldn't mind seeing one more pullback and then a rally here, breaking through this high with some stronger momentum. That would be ideal for this market. Like I said, potentially this is a resistance level around 1730 right now, this lower trend line, and there's also a 50-day moving average at 1744. So this could be a very short-term trade if we find some resistance there. We've trailed our stop. Otherwise, if we could finally break through there, I'm looking at the number 2 point and the 200-day moving average as a potential target. So around the 1800 price level. Some background on the milk market. The October contract has a margin requirement of $2,090, and then your maintenance margin drops to $1,900. So that's on par with other physical commodities. It's traded just 19 times today. Not great. So if we're trading with stops, there's the potential of slippage, but there are 5,261 contracts in open interest. So I've seen commodities with less. So we can work with that here for the milk. Here's a snapshot of what the Trade Spotlight advisor service looks like. It's an email service. So you get this email in your inbox. It'll have a write-up of the trade, precise entry and exit orders, so you know the risk reward parameters. You're welcome to adjust, contact me to talk out, a different strategy to fit your risk reward profile. Any important information like margin, like I said with the milk, and then a chart you can click to enlarge. If you're not a subscriber yet to the Trade Spotlight, just go to the Daniels Trading webpage, click on the Advisories tab near the top of the page, and then under Technical Analysis, you'll find the Trade Spotlight, where you can learn more, see recent posts, and click the orange button to subscribe. It is a free resource to everyone right now, so feel free to subscribe and follow what I'm doing. If you have any questions on the charts I discussed today, markets in general, trading in general, here's all my contact information. Feel free to reach out to me via phone, email. You can even text the cell phone. Thank you for taking the time to watch and listen, and happy trading.